Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, April the 27th, 2016. It is FOMC Minute Day. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you want to come in and check us out, I'll put up my contact information in just 1 second. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you do want to check us out, send me an email at quantumleapfutures@gmail.com. There is no website, there is no blog. This is what we do here live. We do these live sessions in the go-to, then we do live trading during the course of the day. And, this is not a commercial venture. It is a self-organized learning environment. You will need a Skype account, so open a Skype account or send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, there's over 300 days of them up on YouTube. You can check us out, what we do each day, every day, and what our performance has been. Just do a search on YouTube for Quantum Leap Futures. If you like what I do, please follow me on Twitter at Crazy2. Okay, so yesterday our hypothesis was an open auction out of range and then a move down towards the 78.50, and we were looking for responsive buyers somewhere between the range high, the value area high, or the VPOC, and then a rotation, finding responsive buyers and a rotation back up towards the 2100. That was hypothesis 1. Hypothesis 2 was a open auction out of range, a move up into the 91, 93 area, and then sellers stepping in and taking us down through that 78 and possibly down into the 75. And hypothesis 3 was open auction out of range and basically chop around between the 78 and the 91 area and go sideways for the day leading into the FOMC meeting. We got kind of all bits and pieces of the 3 hypotheses yesterday. We open auction out of range, we went up, took out the overnight high to the tick. Now, I want to make a note of this. We have had our RTH high at 91.25 yesterday. Our Globex high was 91.25, in the Globex yesterday, and 91.50 was the Globex on Sunday night. So that 91.25 area has become a very weak high. So just make note of that right there. The other thing I want to point out, well, let's do the news first. We did have global trade balance, came out better than expected, minus 56.9 versus minus 62.5. This morning we've got pending home sales at 10 o'clock Eastern. We've got crude inventory at 10:30. Of course, the big one is going to be the FOM statement and the federal funds rate at 2 o'clock, and we'll see if we get a rate increase or not. Not likely, but something to keep note of. I want to point out this again, this is not just a room for trading. This is also a room for education. I pointed this out before, but I think it's worthwhile pointing it out again, is that last night in the ETH session, Apple reported, and they came out and their growth was stunted, and they had a bad report. And the market moved down off the open of the ETH, came down into this 84 level and closed at 84 with a low of 83.75. Then the Globex opened, and we had this Globex gap. And I posted it in the room last night, gave the alert. And these Globex gaps, even on news, I don't care if there was bad news or not, these gaps have a 99.5% probability of being filled. And I took the long. My first entry was 82 and a quarter. My best entry was 81 and a quarter, and it was about the only trade that was worthwhile last night, because last night was very tight. We only had a 7.5 point range. 88 and a quarter down to 80.75. We had an inside range last night to the prior RTH session from yesterday, and basically balancing in around the 83.5, 84 level, and finding some balance. I'm hoping that when we go into the FOMC, that we're going to be in this balance at 83, because if we're in this balance, then we've got a nice Fed Ferrari trade set up. I'm going to put one on today if we open up between the 83.50 and the 86 in this balance. And the wings of it will be up at 93 and down at 75.50. So that will be a trade that I'll be looking to put on if we open up inside of this balance right here. Okay, so let's get to our normal routine. I always like to start my morning looking at a monthly candlestick chart. I use a 9 EMA, 20 SMA. I start on the monthly. What I'm looking for is slope and separation on the moving averages, and where we're violating or challenging the trend. And you can see we've had this beautiful upward trend for the last several years on the monthly, and then August and September they violated it. October and November they took it back, and then January we challenged it again. December we challenged it again. January and February we violated it, and then March and April we've taken it back. So we're currently above the 9 and the 20. We are in consolidation on the monthly, but we are in a position of a possible continuation up on the monthly. On the weekly, we've had this parabolic move, we've got good slope and separation. Price is paralleling the 9 nicely. We do have a naked cross down here at the 83.50 area. The trend is up on the weekly, but at some point in time we're going to come back down here to this 83. I'll be looking for when we come down and get below that 20, 40, 50 area, that microcomposite VPOC of the balance that we just broke out of, but more importantly, that all important support down at the 2016 area, which is the microcomposite LVN of the prior microcomposite from the last quarter of the 2015. And I'll get into that in just a minute. But the trend itself is still up on the weekly. We got a technical gap here on the weekly, so and we are seeing some weakness coming in here, but the trend is very much intact on the weekly. On the daily, same thing. We had strong upward movement, good slope, good separation. Then we challenged the trend, then took it back, got the continuation pattern, and we're back above the 9 and the 20. You can see we're losing some slope here on the daily, and we're testing the 9 EMA right now from above at 2081.50. 2081.50 has been our line in the sand. It's going to continue to be the line in the sand right now. Below that, I'll be looking for a move down into the 75.50 and that 69.75. But the trend is still intact, but we are starting to come down and test it on the daily. Moving to the intraday, we kind of rolled over. We had this downward trend. They took it back in the Globex yesterday, went sideways in the RTH session and sideways in the Globex last night. We are challenging the 20 right now. This is more consolidation rather than anything else. Going to the 1 hour, we start to see that we've kind of rolled over, but again, more consolidation rather than trend. We do not have slope and separation to the downside yet, but we are trading below the 9 and the 20, and of course, we could start a downward trend, but today is going to be a news day with the FOMC statement, and so that is going to probably revalue this market. Either way, we don't know which way, but coming into the RTH session, we are consolidating. You can see consolidation again on the 30-minute, and again, we're below the 9 and the 20 on the 30, and then the 15-minute, same thing, consolidation below the 9 and the 20, and then 5-minute, not 1 minute, 5-minute. We're starting to see start of a downward trend coming into the RTH session. So, consolidation weakness on the smaller time frames, but the larger time frames are still in an upward trend. Taking a look at the big picture. So those that are new in the room, we've been watching this area right here. This is a micro composite that goes back from October through to December. The value area high is 8650. The value area low is 2008. And then this big red line right here is the microcomposite LVN of the double distribution. We've got a beautiful Gaussian distribution up here inside of the value area with the microcomposite VPOC at 6350. The black profile right here is the composite. This goes back to the beginning of 2013, the most traded price being 2061.50. We currently were in this balance area with the microcomposite VPOC being at 2040.50. Just before we broke out, we came up and accepted price at 48 area, 47.48, and then we had our gap up to that 69.75 microcomposite VPOC from prior end of the year of 2015, and then we created a new microcomposite, and I've broken it up into 3 quadrants. The overall microcomposite, the VPOC shifted back up again. I was watching for this yesterday. If you go and watch the video yesterday morning, the microcomposite VPOC had shifted down to the 75.50 area where we accepted balance after the breakout. Then we had our trend day, continuation day. Then they tried to hold value up here at the 93 level. They couldn't, and then they came back down into the 75, and the microcomposite VPOC shifted down to the lower distribution. And we got a triple distribution here. Yesterday afternoon, it shifted back up with us trading in around that 85.75. So the current balance is at 85.75, and we're trading below it right now at our key line in the sand, 81.50. You can see that this 81.50, 81 area is the LVN between the middle distribution and the lower distribution. So below there, I'd be looking for a move down into the 78.50, the microcomposite VPOC from 2 days ago, but more importantly down into the microcomposite HVN down at the 75.50 area, and move into that lower distribution. If we can get back above the 81.50, then a move back up into balance and into that 83.50 VPOC from yesterday, and the 85.75 microcomposite HVN. Another key line to watch is the 89.75. Above that, I'm looking for a move back up into the 93 and continuation up towards the 2100 and that all-time new adjusted high at 21.05 1/4. So Overnight, again, it was an inside range inside of yesterday's RTH. Our overnight low so far, I mean, we are coming down. We could put a new low in, is at 80.50. Is it 80.50 or 80 and a quarter? 80.75. 80.75, and our overnight high is up at 88 and a quarter. And I doubt we're going to get a VPOC shift. If anything, it's going to be a small shift. And up here at 2083. And there's no LVNs. Very strong kurtosis or balance area at 2083, right near our VPOC from yesterday at 83.50. So some strong balance there. All right, and that gives us all the information we need from overnight. Let's just stretch this out. So again, our value area low is at 81.50. This is going to be our key line in the sand. Below that, I'll be targeting the range low at 79.50 with the target below range and value at the 78.50. The 75.75 is no longer our MC VPOC, but it is going to be our main target below. And then below that, we've got 73.75, and then the big one is going to be the 69. Our daily ATR 20 period is running right now at 2104, so off the overnight high at 88 and a quarter. Our daily downside target is 67 and a quarter. And then we have the start of the gap zone down here at 64, all the way down to the 58.50, and we've got this cluster down here. So if we break below and we don't find buyers in the 75 range, and we get below 73, I don't think we're really going to hold up here. I think we're going to come down. Got a lot of repair to do in this gap zone, and down from 64 all the way down to 54, this 10-point range with our microcomposite VPOC at 61.50, our prior MC VPOC from the end of the year at 63.50, a naked VPOC at 63 and a quarter, a naked gap close at 60 and a quarter, and the naked gap close at 56, and a naked VPOC at 54.50. A lot of repair down here. Don't know if that's going to happen today, but if we see weakness and we do not bounce off of the 69 or 75 level, then we could see a move down to test the top of that gap and start repairing some of the auction down there. Above 81.50 inside of value, of course, you've got the 83.50, then you've got the 85.75, and then you've got the open and the value area high from yesterday's RTH session at 86.50. Above that, I'd be looking for a move to take out the overnight high and test this 89.50, and that's going to be our key line in the sand above. And then above the 89, we've got the 91.50, the week high. Okay, the 91 and a quarter to 91.50. This is when we've got triple top up here. in the Globex sessions, the last two Globex sessions and the RTH session from yesterday, and then the main target above is still going to be that upper microcomposite HVN up at the 93. Above 93, a little bit of resistance coming in at 98.50, but really if we get into the 90s again, and get out of yesterday's range, I'm looking for a move back up into the 2100s. Our daily ATR upside target off of the overnight low, currently at 80.75, is up here at 2101.75. So we do have range capabilities, even with the tighter 20-day ATR at 21. We still have room to get into the 2100s today. And then the new adjusted all-time high at 2105 and a quarter, rule of 10 at 2110, and then we have a bunch of measured moves above at 2115, 2126 and a quarter, the unequalized high, the unequalized all-time high was put in at 2134. This has a history of being what I call equalized, where the new contract comes up and meets the old contract to equalize the all-time highs. And then our weekly ATR target is still up here at 2139.50, and we still have 3 days of range to get there. So 3 times 21 is 63, and we're currently trading 20.8175. So that still gives us the possibility of hitting that weekly ATR target up at the 2134. 3 days of range of 21 would give us a 2144 target, 2145 area. So those are the levels. What are we looking for? Well, right now, if we open up here, we're going to open up inside a range, inside a value. So we're going to have an open auction in range or an open test drive, one of the two. I fully anticipate that the overnight low, since we're only about 2 points away from it, is either going to get expanded or it's going to get taken out on the open. My main hypothesis is, open auction in range, a move down to the 78.50, possibly down to the 75.75, chop around, and then finding responsive buyers and slowly working our way back up towards the 83.50 into the between 83.50 and 86 area into the FOMC statement. And then if we get a positive move, a sharp move lower to test the range low, and then a strong move up and a move into that 93 and possibly into the 2100s on good news. That's my main hypothesis. Main hypothesis, just to be clear, chop on the open, move down, take out the 78.50, possibly down to the 75.50, chop, and then slowly work our way up, come into the news between 83.50 and 86. Good news, sharp move down, and then blast off up into the 93 and possibly 2100s. That's hypothesis 1. Hypothesis 2 is we have an open auction in range. We take out the overnight low. We hold the range low, maybe dip down to the 78.50, and then move up into the 89 to 93 area, chop around there, and then, good news, a move back down to the 83 area, and then launch from there up into the 2100s. That is my secondary hypothesis. My third hypothesis is we chop around, into the 83.50 area, and then get news, and then a sharp move down and a pop. All my hypotheses today are to the upside. If the news comes out negative, then I'd be looking for a pop and drop. And I think the drop is going to take us all the way down into the 67, if not 64 range. So most of my hypothesis is positive because of the fact that I don't believe that they're going to raise rates. But if they do raise rates, then everything changes based on revaluation, and I would be looking for a sharp move down into the 64 gap zone and towards that heavy repair zone that we need. So that's what I'm looking at in the ES. Currently right now we are trading below the Keltner center line, which is sitting right here at 83.75. A move down to test the lower Keltner is going to take us down into that 78.50 and the naked VPOC from yesterday. Above the Keltner center line, a move up to the upper Keltner is going to test that key line in the sand above at the 89.50. Quick look at the book. You can see that we've got zebra stripes all the way down to that 78.50 area. So we do have some liquidity below. The book is pretty light right now, anticipating light volume coming into the news. A little bit of liquidity up here in the 83.50 to 84, but nothing to give us any clear definitive direction this morning. Quick look at gold. Again, gold, the composite VPOC, the most important information on gold is the composite VPOC shifted from the 1204 area up into the 1235.30. This goes all the way back to October of 2008. And we've come up here and we're trading inside of this balance, and currently our microcomposite, why is my microcomposite? This should come all the way back to here. Doesn't really change anything. Microcomposite VPOC is in line with the composite VPOC, and I'm anticipating a lot of chop. Today is likely going to be a breakout day in terms of gold on the news. The breakouts are 58.70 to the upside and a move up into the 67, but the main target above is going to be this 83.30 area with the breakout, and then the breakout to the low side is down below the 26.60, and the main target obviously is going to be back at the former microcomposite or composite VPOC down at the 1204 range. So that's what I'm looking at in gold. I took a trade on gold yesterday just because of the opportunity, but to me, gold is not in a spot that's good to trade right now unless you get the right setup. So that's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.